Hello, everybody. Welcome back to Arthur Invests. All, I think, total 6 subscribers I have who I don't actually think I know. So, thank you for checking out the channel. Thank you for taking a peek at what I'm having to say here about what's going on in the real estate market. So, look, if you're interested in finding out what an average, everyday real estate investor looks like, somebody who still has a day job but is technically financially free, please hit like, hit subscribe, interact, make some comments, make it interesting so we can keep doing this stuff together. But anyway, when I put this channel together, the intention was not to be a YouTube celebrity or to even have a huge audience. It's just a place for me to kind of collect my thoughts and share them with who's ever interested in engaging. So if you're interested, hit like, hit subscribe. Let's jump in for today's topic. Now, I want to share something with you if you've never had a chance to check this out. Here's a resource, right? So from time to time, I want to share with you things that I'm doing that are helping me become a better investor, helping me stay sharp and on point from what my thoughts are about what's going on in the real estate market, how I'm formulating my hypothesis around my investment strategy, and how I'm trying to position myself to grow wealth for my family and to just continue to excel at some of my financial goals. So here's what we're talking about today. If you are looking for a great resource, obviously you probably know about Bigger Pockets. You probably have found other things online, but here's a subreddit that I had never found up until this past week. It's called Real Estate Investing. So it's the Real Estate Investing subreddit. And there's a lot of great stuff in here. It's not as easy to sort and to find things as Bigger Pockets. It's certainly not as commercial, but there's a lot of really interesting topics and articles. So if you haven't had a chance, check it out. That's my plug. But one of the subreddits came up. Well, I thought this was interesting. So, so much on YouTube and social media and out there in society, it's about posturing, right? It's about trying to show that you know something that maybe you don't. And one thing that just gets my goat, really gets me frustrated, is the amount of YouTube experts who are out there talking about investing or real estate. And while some of them are experts, I mean, a lot of the smaller channels are folks that are just like, just some dude in his early 20s or like early 30s talking about, his net worth and all the stuff that he's doing in the market. Like I just have to call some BS on all that. And specifically around the topic of the real estate crash. I mean, I still cannot believe to this day that you're seeing people talk about a real estate crash. I mean, how much egg on their face can these people take? Right? I mean, they obviously got it wrong last year. I got it wrong last year. I'll be honest and say that. And I'm not afraid of sharing that. At the beginning of COVID, if you listen to some of my videos, I was preparing, and I didn't think it was going to crash, but I was preparing for not necessarily a real estate crash as much as a potential tenant revolt or, look, we were told we were going to shut down the government, not shut down the economy. People were going to get kicked out of their jobs. And I was afraid that, look, people wouldn't be able to pay rent. Well, I got bills. I'm still on the hook. So I sold a couple of properties, or actually I didn't sell any. I financed a couple of properties that were paid off, and we just sat on a bunch of money. And that's why we did so many acquisitions over the past years, because once we realized that, hey, this pandemic's actually doing the opposite, we need to put the money back out to work. And so we bought about 4 houses in the last 3 or 4 months. So it's been great. But my point of that is not telling you that. And my point is to illustrate that I didn't really know what was going to happen. And so I don't knock the YouTubers who don't know what's going to happen either, right? None of us do. But the fact that they're still saying this because they know it's going to get clicks. And look, that's fine, right? We all have a business model that we're trying to follow. But it's just bullshit. At the end of the day, nothing is going to happen with a big real estate crash. You're going to see prices decelerate. They're not going to be growing 20% year over year or any of that nonsense. But we just know that there's some fundamental things in place that are going to keep prices elevated and keep demand strong. Now, what am I bringing this up for? Oh, I just thought this was some interesting common sense advice from somebody who is not necessarily an active real estate investor, but somebody who is coming from a different approach, maybe a different perspective. And so it's always good to kind of challenge yourself in like, whether it's politics or whether it's investing. Sometimes listening to another perspective can really help you clarify your hypothesis or some of your ideals. Okay. All that being said, this is one of the topics that came up on the subreddit. So he said, market crashes don't happen when everyone's waiting for it. Kind of simple advice, but it's probably true. And so one of the things he starts off saying is that he's technically an equities trader, right? And a market analyst. So this guy is, sitting in one of these firms and he's looking at things, and his role is coming at it from more of the Wall Street perspective. And he says, I still see tons of people on the sidelines calling for a market crash, which I've just iterated. That is absolutely the case. You still hear people saying that. I can't tell you how many, folks that I meet on a day-to-day basis, or family members and friends who are like, look, I need to wait. Real estate's too crazy right now. I'm going to wait for a correction. Okay. And he speaks to this. He goes, I just want to give everyone a friendly reminder that when the average person is trying to time the market crash in either stocks or housing, it probably won't happen. I mean, that makes sense, right? Like it's a little bit of when everybody is waiting and waiting and waiting. Well, no, it's not going to happen. It's usually crashes occur when people are not catching a trend or seeing some sort of flaw within the infrastructure of the investment. And that's exactly what's happening now. And so you have a lot of people waiting and hoping, but you don't see that acceleration. So it's very interesting. In my experience, whenever people start to scream that the markets are overpriced and the average person starts to position themselves for a crash, well, it usually never happens until the doomsday, or they finally given up and the market actually starts to correct. So his whole hypothesis is, look, you're going to have the average Joe saying houses are overpriced and people are going to wait. And what will happen is they'll get to a breaking point where people are like, okay, look, we're obviously not going to see a crash. Let's just go ahead and pull the trigger. And then he's like, that's likely when, if there is going to be a crash, when it would happen. And I completely agree. When everyone said real estate is radioactive, don't touch it, that's the best time to buy it. And when everyone's talking about buying 3 or 4 houses and buying more rental property, well, that's the time to sell it. And when cryptocurrency is doing the same thing, or stocks, like you got to kind of keep in mind. So I thought that was a pretty interesting perspective. And he had some interesting ideas here. At the very end, he said, and I also want to say, for people thinking interest rates are going to spike, they're probably going to be waiting to 2022 or 23. And by that time, the housing market could go up another 5 or 10%. So if there was a correction, it's probably going to just bring the prices back down to 2021 prices, even if there is a higher interest rate. So the basic advice here is don't try to time the market. Look at a good deal, and if it makes sense, pull the trigger, period. That's the whole thing. And so you have some interesting comments here. People are pretty much agreeing with him on the most part. One of the person had a good point. It says, look, you can't time the market, but if the deal doesn't make sense, then don't pull the trigger. And I think that's pretty much the whole thing is like, look, don't time the market. If you're an investor and I'm not talking about a flipper, right? Flipping is a business. It requires some capital. You do need to invest that. But, typically what I'm thinking about when I'm thinking of an investment is something I can put money in that will yield a return that is relatively low risk and low effort. And I think rental property is probably the best case for that for me. And so I have friends who have been talking about getting into real estate investing for about 2 to 3 years. And like, I'm just waiting for the correction. I'm going to get in when it gets down a little bit. And now that the prices are crazy, I'm like, what are you going to do? And their answer is, well, there's no way I could win in a bidding war. So at the end of the day, look, you do you, right? If you don't feel comfortable, you don't want to pull the trigger, that's fine. But I really think this was pretty sound advice that when everyone's talking about a crash, it's probably not going to happen because, it just doesn't work that way. And I can't think of one scenario when everyone was like, this is overpriced, there's going to be a crash. And then there's a crash. It's kind of like people accept prices at their peak and then they decide, hey, this is something we got to accept. And then that's when the flaws appear. So anyway, I thought I would share that with you. Hope you enjoyed it. Again, if you like the content, you like what I have to say, hit like, hit subscribe, throw me a little comment in the notes section there, and I'll be back with you next time. Take care, everybody.